Cash buyers, this video is for you if you're buying property here in the United States, because as of March 1st, how that's done has completely changed. Our title companies now have an extra step that they need to do on any and all cash transactions all across the United States. Financial Crimes Enforcement Network is otherwise known as FinCEN, and this requires title companies to fill out a real estate report form for those cash transactions. The report must be filled out by the last day of the month following a closing or 30 calendar days after closing, whichever is later. Okay, quick public service announcement here because I can see what's coming. Keep in mind that when the title company starts asking for all the information that they need, this was not their idea. I bet if they could vote, they would go back to how things used to be. They're just complying with the federal requirements, and if the report is not done, both you and the title company can be subject to civil fines. Cash deals are just not ever going to be as easy as they used to be, and it's not their fault. Okay, moving on. The Federal Crimes Enforcement Network started in 1990 by the U.S. Department of Treasury, and the new rule is in attempts to stop money laundering in the U.S. This does not apply to loans because lenders are already subject to the Bank Secrecy Act and anti-money laundering regulations known as AML. The title company will be asking for information such as details about the purchasing entity or trust, identification documents from the buyers, information about the property being transferred, details regarding the funds used for acquisition of the property, information about the reporting person. What types of property are included? Short answer, everything. Family residences, condominiums, shares in cooperative housing corporations, otherwise known as co-ops. What is a non-finance transfer? Is any real estate transaction that does not involve a loan or a line of credit secured by the property, or where the financing comes from a source that isn't regulated under federal anti-money laundering rules. This includes all cash purchases, seller financing, private loans. Simply put, if there is no traditional mortgage or the lender isn't regulated for AML, the transfer is considered non-financed. So, moving on, cash transactions have changed, and those are the new rules. Aloha.